Right. Well, good morning. Um, I'm Cherie Porter. I am the CFO at RightWay and look after our finance, administration, and bookkeeping teams here. And I am joined by Ethan in our Dunedin office to have a chat about GST.
G'day, good morning. Happy to
Morning.
be here. 2 weeks in a row.
2 weeks in a row. You're a pro at this now.
Yeah, well, I'm going to try and bring some energy. You didn't bring the most energy and you're welcome, so let's make up for it now.
Well, this is only my second ever podcast, so weirdly, I don't know why, it makes me really nervous to talk and have the possibility of somebody listening to it other than probably myself and my mother. So,
Oh, there's nothing to lose.
yeah, exactly. Hi, Mum. So, Ethan, let's have a chat about GST. What
Yeah.
is GST?
Well, most people would know GST as the annoying extra tax that makes goods and services, keywords, more expensive for
Yeah,
consumers generally, so that the government can essentially make some more revenue. And they decided that income tax wasn't enough and all
they
the other
needed a
sort of
little bit
taxes
more.
they do. Yeah, they wanted to hurt the general public a little bit more, and yeah, and all that sort of stuff. So of course, how they get it, they essentially get it through businesses. So that means that the businesses have to charge GST on the goods or services that they supply. They call it
Yes.
taxable supplies, and then at the end of 2 months, 6 months, some cases 12 months. Oh, sorry, two months, 1 month, or 6 months. They do business will do a GST return, and they'll essentially give some money to the government. The difference between the GST that they've charged on the goods and services that they've supplied, and the goods and services which they used in terms of creating those supplies.
Or paid, yeah, GST that they paid.
Mm.
Um, it is a GST that it is a tax that actually flows all the way from the sort of, I suppose, raw material supplier all the way down to the end consumer, because essentially the plus and minuses of that, even though we're all paying GST at the end of each of our GST periods, but essentially that GST is just passed all the way down that line in this sort of long chain to the end consumer, so that that's the person that actually foots that bill, um, which is
Mm.
quite interesting. It's quite an interesting way of looking at it. So, as a business owner, what do I need to be aware of with GST? And I suppose in terms of particularly financial or accounting, because that's what we do. Um, what what awareness do I need to have of it for my business?
Well, I guess first and foremost, when it comes to GST, you first of all need to remember that it's there, that it's something that needs to be accounted for. The key word, I
Yeah.
guess, when it comes to accounting is accounted. Uh, yeah, so if you're making calculations or forecasting, uh, say things like a sales price or a profit or anything like that, you need to remember what expenses will have GST on them, that you're going to need to put GST on your sale price and all that sort of stuff. So it just comes into consideration when you are thinking about like what price you want consumers to pay. Essentially, I actually had this discussion with a client a couple of weeks back. Um, it can be a little bit confusing.
Yeah.
They're like, oh, I want to make this. I want to say, let's just say, I want to charge $100 for this, and they're thinking in their mind, I want to charge $100. The client will pay $100. It's fair. It's all good. That's where the market's at, and I'm making the money I want to make. But they forget the fact that, well, if you were to only charge you
$15.
$100 and that's all they're paying, then that means it's like 85-ish dollars plus just
Correct.
to
Yeah.
get to $100, rather than being $100 plus GST, which would be like $115 to them. And all of a sudden it's like,
Yeah.
oh shit, that's right. You start to think, you're like, oh yeah, it's not as simple as that. You have to sort of Think
And
about it a bit
particularly
more.
when you are trying to work out a price point, a 15% price increase or a 15% discount is quite significant if you leave it out of your
Mm,
considerations.
yeah,
So
it is.
instantly, if you've said $100, that's how much you've told somebody, inclusive of GST, then all
Yeah,
of a sudden your margins are 15% down.
that's almost like
Because
the biggest thing, eh? It's like,
yeah, yeah,
oh, I've quoted this or that. Like, because we always say if you're selling something, sell it GST exclusive. Say this is the price GST exclusive. So essentially,
yeah,
when you go to sell your house or your car, you're selling it for whatever is plus GST, like if any, if you know what I
yes,
mean, like depending on like
yeah,
the GST rules around that transaction. But usually it's plus GST. I had this not long ago with a farming or like a rural sector client. They were selling a truck. They had like a Land Cruiser truck, and they were like, "Yeah, my mate's going to buy this. He's paid 30 grand for this truck.
good
Sweet,
mate.
sweet, sweet as they've paid me 30 grand." And I'm like, you do realize that's you're not getting 30 grand. Like you're going to have to give 15% of that to the government, to the IRD, because you claim GST when you bought that truck.
Yes.
So you have to give back 15%, and they're like, oh, you know what I mean? They were selling to someone that wasn't GST registered, so they weren't claiming GST on it. They were using it as as a private vehicle, and
Yeah, yeah. It
headache
actually is
stuff.
interesting, particularly, I suppose, for rural clients who actually their businesses is their kind of lives, if that makes sense. Like,
Yeah, it's
your farm
convoluted.
and yeah, yeah, it is. Yeah. So, yeah, it is disconcerting. Well, particularly to me, I suppose, when I see a property for sale or something like that, and it'll say plus GST, if any. And if I'm buying that as a private person, I know that that actually means, oh, it's 15% more expensive than whatever we work out. I'm going to have to add GST on top of that and pay that to them because they
Yeah.
have to obviously pay that. Um, what are the rules around when you need to register for GST? Because there are a lot of businesses out there who start up and possibly haven't registered to pay GST. Like, what are the rules? When do I need to change and register for GST?
So the big one that stands out is when you are making or you intend to make taxable supplies for a start. So that's supplies that um, by law that GST has to be or would fall under the GST net, or GST would have to be charged on.
Yep,
So that's first of all. But then second of all, which they go hand in hand, these two things, that has to be when you're either envisioning making $60,000 of taxable supplies in the next 12 months, or you have already made that $60,000. You've broken that
so you're talking
threshold.
about turnover, right?
Yes.
$60,000 worth of turnover, not necessarily of profit.
No,
So
not
turnover,
profit. Yeah.
yeah. So
It's
making sales of that value as
yeah.
opposed to, which can be quite difficult because sales sometimes at the start of business is a bit convoluted and it's not of uh, GSTable products or services right at the beginning.
Yeah, absolutely. Like for a lot of businesses, it's obvious. You're like, okay, I'm going out on my own, and I used to make. Let's just say you used to make like a $80,000 salary or something.
Yeah,
That was what you were paid. So you're like, well, I'm not going to go out on business and not earn that same sort of money.
yeah,
So I need to be making sales that are much in excess of that because I want my profit to be at least $80,000.
yes, yeah,
So your suppliers are probably going to be in the hundreds of thousands a year. So
yeah.
with like simple math, you would
Working
register.
backwards.
Yeah, you would register for GST as soon as possible in that
Yeah,
regard, and we'll get to that in a second why you would do it sooner rather than later. But you would then know pretty clearly that that was going to be the case. It's when you're doing something kind of as a side hustle
yeah.
or part time. It's not necessarily like your main thing, or
Initially.
Yeah, or it's just going really poorly or really slowly. It's going to take a long
Yeah.
time to get going. That's sort of a situation where you're not sure necessarily if you will break that threshold. And
Yeah, I
yeah, and if
think
you're
it
not sure,
particularly for
yeah,
products, I think like a lot of companies for a product can go into development for a long time. I don't know, let's say I'm selling widgets, for me to design what that widget is or how I'm going to even sell it, find those sales channels, that can take a long time. So a lot of people will start out with working full time or part time while they're doing that side hustle before that
mm,
business kind of takes over and is actually paying their salaries, which back to the math of before, when that bottom line drops out and you realize, oh, actually, I'm making enough money to cover myself here, then that's, yeah, but it can take a long time to build to that.
yeah, it really can do. And when it comes to, excuse me, a situation where you're envisioning it getting to the point where it will be sustainable or self-sustainable in terms of a decent amount of money is involved in it,
Yeah.
and with that, breaking that taxable supply threshold, you generally would be advantaged to register sooner rather than later, because then you might well have a lot more expenses
Mm,
up front than actual income. So you might have what they call taxable inputs that you have to
yeah.
pay before you've actually got um, a good product or a good service to sell
Yeah.
to consumers. So you get the benefit of claiming that the GST, the 15% GST, before you actually have to give any GST to the government.
Yeah.
So
Getting that back.
yeah, and often this sort of gets into a bit of a pitfall, but often people will register for GST later than they should have,
Yes.
because they didn't realise that there was necessarily like an advantage to doing it sooner.
Earlier. Yeah.
Yeah, they're like, oh, I didn't really want to have to bugger around to file GST returns, and I didn't I didn't really want to have to engage an accountant before I desperately needed one, because they didn't want to pay like whatever like, or they didn't want to spend the time doing the GST return, or they didn't want to
Yeah.
pay the accountant for their time. Um, but it can get a little, but you can really shoot yourself in the foot by not being able to claim some of these expenses, or at least not being able to claim them as soon as you would otherwise, where the GST refund would outweigh probably the compliance cost to you of having to file the returns.
Yeah, I mean, I've previously had a side hustle, and I must admit I registered for GST really quickly, pretty much as soon as I'd registered my company, because the research and development costs of even things like packaging is really expensive. So you often have to, if you have something supplying something that needs to go into a box, you have tooling costs to obviously, have
Mm,
that box folded in a certain way. All of those sorts of things are actually quite expensive as well. And being able to get the GST back on those, at least, when you're starting up, it was quite significant. Um, so, yeah, I would say I think I think you're right. A lot of people avoid it, but in actual fact, right at the very beginning is often when you've got so many expenses, that being able to claim the GST back on those in those initial stages, and
mm,
also being able to declare all of your research and development costs as well, which you can't do until you've registered your company. That's a whole other podcast. But
mm,
but essentially, once that's registered, all of the expenses, and you realise like, hey, this is a viable company. Well, at least I think so. And so I'm going to register that, and then all of the expenses obviously go against the company. If I've registered for GST, then I can claim all of those back.
mm.
Um,
Yeah,
yeah, it's kind of a difficult call. I actually think there is a lot of people, particularly selling services that don't, or selling their own time. So anybody that's, like you say, you go out on your own, whether it's as a builder or an electrician or a plumber or a bookkeeper or whatever, a designer, when they're selling their own time, that tends to be the harder call to make,
yeah,
to register for GST. Your setup costs are actually relatively simple. I think
yeah.
most people probably just need a laptop, or I don't know, but well, plumber probably doesn't need a laptop's no good for plumbing, is it? But I think that is when people kind of get that harder call. Do I need to register for GST now? And do my prices need to include it? I also think a
Yeah,
pitfall is that they're charging inclusive of GST, despite the fact that they're not registered for GST. So people need to be very careful about that, because if you're not registered, you cannot charge it.
yeah, yeah. That is something to be careful about. Much the same way of, as soon as you register for GST, you have to charge it.
You have to charge it, yeah.
You have to have your invoices same, plus GST, or including GST. Yeah, you have to. You can't do it when you're not actually GST registered. And
Yeah,
as you say, Cherie, you are right. And more often than not, when it's ambiguous whether or not you should be registering for GST, it is people that essentially are just supplying their labour time.
yeah, yeah,
Like people, creative people, consultants, that sort of stuff. They aren't selling goods along with their time. So
yes,
builders and plumbers and tradesmen, and they're also selling materials whilst they're selling their time. So yeah, once you're selling goods as well as your time, it's easy to break the threshold. But when it's just you, it's not so clear.
it's a little
And
harder.
yeah, and a good point on that is probably that's where it's probably is important just to know or have some idea of the amount of contracts that you might expect to have, or the level of contracts or business activity you might expect to have if you are labour hire, because if there's not a lot of it costs up front to you, and often when you're in the labour more of a labour supply, labour hire business, you don't have as much input cost. So the advantage to you being GST registered early is probably not the same,
Yeah, yeah.
because do you know what I mean? Like,
You'd be paying it straight away,
yeah,
really. If you haven't got any
yeah,
costs to offset,
yeah,
then you are paying GST straight away, which can
yeah,
feel quite difficult when you're just starting out.
yeah. It's essentially like just you'll be paying 15% to the government on your profit, rather than having a loss for a couple of months, or like that other businesses might experience by the time they've bought their new vehicles and um,
Yeah.
things like that. So yeah, it is an interesting one.
Well, the other thing that we wanted to talk about was how Xero will help with coding GST. And one of the things that we see in the bookkeeping team regularly, I would say, is when clients set up in Xero a chart of account codes. There is another podcast on that that RightWay did earlier this year, actually, on chart of account codes. But they don't use the Xero templates, or they set up their own codes and they forget to make that code GST applicable. So what often happens is the coding of any transactions through that particular code. Let's say, for example, I don't know, let's say it's specific costs to your business that you've decided to create a code that you want to track. I don't know, let's call it paper, even though that's probably in there somewhere, but paper. And if you don't make that paper code GST applicable in Xero, then actually Xero won't attribute the GST out of any coding for that. So it's just a kind of something that we see in the bookkeeping team kind of time and time again, where people don't set that code up correctly, and then come GST time, we're having to make a journal or recode those transactions to include GST, and it's a sudden sort of hit to the customer, be it a sale or an expense. Obviously, it's a surprise at come the end of the year, or maybe the end of the period, GST period.
Yeah, well, in this day and age with accounting software, it does make doing GST returns and I guess just accounting for GST and that a lot easier than it would have been in the past, when you had to do things a bit more manually. But with software such as Xero, I see this quite a lot with clients and new businesses and things. It's really important that you spend the time getting it set up right
Mm,
initially, and not just the software getting set up right, but also registering the business or the entity for GST appropriately. So there's many ways that you can actually, I guess, slice and dice a GST registration.
Yep.
It's not as simple as just going onto the ID website and saying, yeah, I want to be GST registered now, sweet, I'm off and running, I'm charging GST, I'm claiming GST and all that. You have to decide or tell the IRD what basis you're going to account for GST. So that there's 3 different types of bases, but we'll just focus on the 2 that are most common.
Oh, I didn't know there were 3. I only thought there were 2. So there you go.
Yeah, well, there you go.
Yeah, I've learned something today. That's good.
The most common ones that people might have heard about is the payments basis and the invoice basis. So the payments basis is when you account for GST. So you claim GST and you return GST based on pure cash transactions. So when you were paid and when you paid someone else, that's all that matters. Invoice basis is when you're essentially doing what they call accrual accounting, where once you've actually invoiced a client or a customer, it's the date of the invoice that matters. That's when you have to essentially return that GST.
Account for the GST.
Yeah, account for GST in your GST returns, and the same thing with the bills. But once you've received a bill or an invoice from one of your suppliers, that's when you account for the GST. So not when the actual timing of when you pay the bills doesn't matter. It's the fact that you've received that or you've issued it yourself. So yeah, that's an interesting one. And if you are doing your own GST registration, that is something to think about. Like there's advantages and disadvantages of either. And I mean, you'd logically, or you'd argue that whatever happens comes out in the wash eventually anyway, and it's a timing difference. But what I've found, if you're a particularly cash poor business, you are better off being registered on a payments basis, especially initially, because then if you've had to pay a lot of expenses in one GST period, you can get that that income back or that GST back sooner.
Yeah.
And vice versa. And then, because what I've seen happen is a business will issue a whole lot of invoices one month, but they haven't been paid by any, but they've got to pay the IRD.
The GST on them. Yeah.
Yeah, and so they have to make sure that by the time that the GST is due to be paid, their clients have paid them.
Yeah, they've got the money in the bank.
Yeah, and it can just create some headaches that don't necessarily need to be there.
Especially, I mean, if you think the majority of supplier invoices when you're on account are 20th of the month following. So if you're on a payments basis and you're not paying until the following month, then you can't claim it either until the 20th of the month following that. When that payment goes out, then actually that makes the GST claimable at that point. But the flip side of that, like you're saying, is raising a bunch of invoices for clients, and if your terms to them are hopefully less than 20th of the month following, then again, also they may dribble payments into you. So your GST becomes claimable the minute you pay it, but also payable the minute you're paid.
Yeah,
it actually is a tough one. I suppose, look, the benefit of it is Xero, once you set either invoice or payments basis, Xero will actually attribute GST in the right place for you at that time. So it will not, it actually recognises the terms of those 2 settings and actually understands when it does attribute that GST or when it doesn't, according to those 2 payments bases. Those 2 registration bases, tax bases.
Yeah.
What's the third? Sorry to interrupt.
It's called the hybrid basis.
Oh.
Yeah.
Hybrid.
Can
you plug it in?
Is it? Well, not in most situations, I wouldn't have thought, but who knows? No, like as it probably sounds, as it does sound like it's a combination of payments and invoice, and it's like sort of like when you might account for one part of the business in a certain way and another part in another, but it's very uncommon. It's a little bit frustrating, or yeah, it's not very commonly, I guess, taken up by businesses. I probably have only come across it once or twice in my life,
Yeah, I've
my
never heard of
time.
it.
Yeah, but there's certain businesses that it might suit, but that's probably another story altogether, really.
Yeah, yeah. Well, I think if it comes to clarity, at least with payments or invoicing basis, you can understand with clarity when my GST is going to be due, if that makes
Yeah,
sense.
yeah. It's an interesting one. I tend to you tend to see like a lot of invoice basis, like larger businesses, because that's in line with what, or accrual basis is like how you would do your annual accounts.
Yeah, yeah,
So that means the GST lines up well with that. And otherwise, if your annual accounts are on the accrual basis and then your GST is payments, there can be like a little bit of a timing difference there.
yeah.
Um, yeah,
It,
yeah. So
I
yeah, there's
think
a
it
bit to
is
think about.
important, particularly like you say, with cash poor businesses, but also really important that you understand what basis you're on to understand any cash flow forecasting that you might be doing,
Mm,
because there's kind of nothing worse than a big bill at the end of a GST period, and a client that goes, "Wow, I had not planned for that at all,"
yeah,
and suddenly they're realizing that they're going to have to come up with the cash to cover that GST, and the timing's all out, like you say.
yeah, and that has happened quite a lot with COVID.
Yeah,
And yeah, to be honest, something that we haven't sort of mentioned so far, but it does come into consideration, especially with cash forecasting, is that wages doesn't include GST.
yes,
So for a lot of businesses, the wage expense is the highest expense,
yeah,
by far, um, in the like compared to everything else, and maybe in line with like cost of goods sold, or materials they're using. So wages, you have to remember, A, don't set the codes up in Xero for GST, because that's I've seen
good
it
point.
sounds ridiculous, but I've seen that happen before. And maybe it wasn't Xero, it might have been another more historic accounting
Yeah,
software, but I've seen businesses incorrectly claim GST on wages and then have IRD issues long term. But yeah, so GST is not just going to be calculated off the bottom line profit. There are a couple of expenses, like interest costs will be another significant one, and
yeah,
depreciation, that is outside the GST scope. So yeah, just having a good understanding of what is included in GST and what isn't. But further to the cash forecasting point, Cherie, yeah, a lot of businesses, especially through COVID, when they haven't been going quite so well, or the cash flow's been a bit up in the year, they're still having to pay their staff the whole way through a lot of the time. So
yeah,
when their big GST bill comes, that part of the month might be not long after they've just paid the staff,
yeah,
and at that point, it's, oh no, we're going to do here, because traditionally IRD would charge you interest and penalties if you pay your GST late, or if you
yes,
file your return late. So you need to be upfront with the IRD if there is any issue,
yeah. I think
and
that
get
is
an
really
arrangement.
important. Yeah, make an arrangement at least, or talk to your accountant about making an arrangement. I think that's true for actually any tax. Actually, get in
Yeah,
front of it rather than waiting.
yep.
Um, and and often the solutions are actually, well, look, some can be quite complex, but most of them can be quite simple to set up. A payment arrangement of some sort. Um, the important factor in that is that you want to have had a kind of a clear run at the IRD. So you want to have had a clear history, is what I mean, like paid
Mm,
everything on time before, not been late before. That actually really helps to have that conversation. And yeah, I think very, very, very good point. One of the things that actually I have noticed as well recently, with some changes in the way GST is attributed, is there are often foreign currency expenses that are GST applicable. So Google's a big one that actually has GST on it. So any Google selling that you might have, often your invoice will come in US dollars with a calculated New Zealand dollar value of that invoice at the time that they invoiced you with GST on it. However, when Google then goes and takes that money, either normally from your own credit card, from your business credit card, it actually takes the money at the value of the US New Zealand exchange rate on the day, which affects the GST calculation. So that's something that is kind of noteworthy, because if you process that invoice with the New Zealand dollar amount declared at the time of the invoice with that GST 15% showing on it, and then there is actually an exchange rate change when they take the money, it actually affects GST. So there's a couple of clients that I've seen stuck with that problem, not realizing they've coded that they've coded the foreign currency exchange change to FX gains losses, but in actual fact, it's got GST on it. So there is actually a GST value to change, either go up or down. But that's something just to be aware of, anything that comes in foreign currency with GST on it.
Yeah, interesting one. It won't necessarily apply to all businesses, but it's just something to think about.
It is, yeah.
And they might come across it from time to time.
Yeah, yeah. So GST returns, how easy is it to do a GST return for just the common business owner?
Yeah, for the common business owner, I guess the question is, what is a common business owner?
That's a good question. Yeah.
Like, well, what is the
What's
average?
normal?
You know what
Yeah.
I mean? Yeah, exactly. And it's a loaded term, normal, but in terms of approaching it from a one size fits all approach, it's not too hard to do the bare minimum in terms of doing your GST.
Yeah.
Or satisfying your immediate obligations. Like if you've got a good accounting software and you know that it's set up properly as it should be, there hasn't been a hell of a lot that's changed in that particular GST period. So say you were 2 monthly registered, which is majority of businesses will be. Say those 2 months have been relatively routine. The GST return shouldn't require too much trouble. You should be able to rely on the information that you've coded in Xero, run that report, run that GST return report, and essentially go into the IRD and file it like that.
Yeah.
Where there's another level of detail with GSTs that quite often there's a few things that go on during the year that you actually, if you want to get completely right, which you do, or accountant would do for you when they're doing the annual accounts, you have to analyze it a little bit and make adjustments to it, like entertainment expense, private use expenses, and all that sort of stuff. Claim some other stuff like home office and that sort of carry on. Some relatively minor in the great scheme of things, but in terms of like being correct for GST and what would stand up to a GST audit, say if the IRD won't audit, that does need to be right eventually. So you have, if you don't want to do that every period, then it can be pretty simple for you to do your GST return yourself if you've got the time. But otherwise, if you want to make sure everything's 100% correct, it just can take a little bit longer. The other thing is 2 months or whatever your filing frequency is a good opportunity or a good time frame to get back into your accounting software and just check in on that everything's running smoothly.
Also, I think as well, it is, you're right, it's actually kind of like, it's like changing the batteries in your smoke alarm, right? Every time we change the clocks, that's something that we should look at. I actually think GST is like cycled quite well for that, whether it's 6 monthly or 2 monthly. Obviously, some businesses are 1 month, but that's relatively rare actually. But I think it is that it's about getting in and understanding what documentation you have to support some of those purchases as well, particularly bigger purchases that might have GST on them, and you've bought a large piece of equipment for a factory, or invested in some tools, or a new car or something like that that may have GST implications on it. Making sure that you are a little compliant, I suppose, more compliant, and give your accounts a bit of a tune-up at the same time. I think it's
Yeah.
probably the reason why so many businesses elect to have their accountant or bookkeeper do their GST for them, is actually they'll know that at that, every couple of months, somebody's got in there and combed through a little bit and found some problems for you, to some exceptions that, hey, we need to have a look at this. So it's a good time to take a health check, take the
Yeah, it
temperature
is.
of your accounting.
It is, and we certainly encourage. When I say we, I mean RightWay and me with my clients. I certainly encourage that the accountant does the GST return if they're doing the annuals as well, because when it comes to doing the annuals, they're a lot easier, a lot quicker to get done than if the accountant hasn't seen that much of that business throughout the year.
Yeah.
They haven't made some adjustments as they've gone, and then all of a sudden you've got all these adjustments that need made, and you're sort of starting from scratch a little bit.
Or you get a
So
million queries from your accountant to find a piece of paper that you had
yes,
8 months ago, and
yeah,
you're
that's a big
like,
one.
what did I do with that? Like, it's
Yeah,
around here someplace. So, yeah, I think you're right. It is a lot harder at the end of the year to get all of that information, or for you as a business owner or a decision maker in a business, it's a lot harder to find that stuff. You've forgotten, what was it that you spent 8 months ago here, because we don't have anything for it. You've forgotten, you've misplaced the receipt. Yeah, you've got something floating around in your glove box. I
mm.
have had a client tell me that once. It's in my glove box somewhere, and I said, well, that's a really nice small space, you should be able to find it. And he was like, you haven't seen my glove box, like how full it is. Um, and
Mm.
yeah, it took us probably the better part of a month to get that information out of him. And then when he found it, it was like a sort of eureka moment. But there was a mad adjustment once he found it, because we had no idea what the GST component was of that transaction. Um, yeah, I think we've pretty much covered everything, I suppose, that we can on GST. Is there anything that we've missed?
There's a lot
We
of stuff.
don't want to dig too deep.
Yeah. Well, what I would say is we've covered some of the things on the surface of GST,
Surface, yes.
and believe you me, there is a lot underneath the surface, just like anything. And on that, you just need to be aware when something isn't normal, something's not in the ordinary sort of process of your business or what you've done before, and do seek some advice or bounce some ideas off someone, just to make sure that you are treating things correctly for GST if you're unsure.
Yeah, yeah, 100%. Um, awesome. Well, thanks, Ethan. Um, I've certainly learnt something today. The hybrid basis of GST, which I didn't know existed. Um, so I'm going to go and quiz some people now and ask them if they knew that existed. How smart is the rest of the team?
I tell you what, the accountants will know.
The account, yeah, the
The
bookkeeper. Well, the bookkeepers, I don't know. Yeah, well, let's ask them.
Yeah, the bookkeepers might not. Actually, I did actually just think of something else. I was just doing some well, not research so much, but just having a wee look at the ID website. The ID website has gotten really good, at giving information, some basic information on this sort of stuff.
Yeah.
And there is a really good tool, and it's under the IRD guided help, and it's called "Do I Need to Register for GST?" So
Oh, great
that's
tool.
a useful point of call. or point of reference. Just
Yep.
if you want to answer a question quickly and you don't want to give someone a call about it, if you're good with the computer and you're good with the ID website already, jump on there and have a look, because you can find some good information.
Awesome. Awesome. Okay, well, it's Friday today, so yay, we made it to Friday. Thanks for that, Ethan, and for sharing your insights into GST, and have a great day.
Yeah, happy to be here. Thanks for having me.
Okay, see ya.
Bye.